Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of March 10th, 2025. Let's get started. SEAF signals for this week. We have healthcare, XLV, consumer staples, XLP, and XLC communications services. This is pulling off our financials after they've taken a little bit of a header over the last 2 weeks. Technology continues to be the worst sector, and starting to see real estate still kind of hanging in there, moving up itself into a favored ranking with a trading week of 3. Heading into our heat map, starting to see that kind of accumulation at the top. All greens here at the top, a lot of reds at the bottom, with the exception of financials here at 1. Flows for the week. We were down 3.4% in terms of outright flows for the entire 11 sector spiders, and three of the 5 days last week had outflows over 1.3%. A lot of money flowing out, and kind of another just tidbit of information. The overall assets in the 11 sector spiders is playing with the $300 billion mark. It hit that in October of last year, tested it again in December, and we're retesting that $300 billion mark. We've really kind of kept that as it's been a really stable level over the last 6 months. So we'll just keep an eye on that flows. If we continue to see these outflows break down, it could break the overall support there in terms of the sector spiders. Coming into our strength of flows, healthcare looking really strong, 0.55% increase on the trading week. That looks pretty good. And as a secondary one, consumer staples at 0.28%. Also relatively strong. Consumer staples really seeing that strength from the tactical month in the trading week. Healthcare now all 3 time periods really, kind of pushing on all cylinders. And outflows, 0.41% outflow out of technology, which is significant, and 0.31% outflow for financials, also relatively significant. We are really starting to see the tables turn here in terms of our sectors, with healthcare and consumer staples, which are more defensive in nature, here up at the top. Going into our rainbow charts, communication services still looks relatively strong, really strong relative outperformance versus SPY, going back really toward August and September of last year, but a really nice strong one, especially coming since January. Communication services still looks relatively strong versus the overall market. Same thing with real estate, kind of taking a little bit of a header here, or not a header, but turning down from upward resistance. Real estate is not a SEAF signal, but overall seeing some relatively strong relative outperformance, and flows are starting to generate in the right direction. As I've kind of pointed out in the past, I really like to see this type of move where we go from a higher number in the strategic quarter to a lower number in the trading week, kind of stepwising, showing a little bit of positive momentum. So if there's any falter in the top 3, could look to real estate to step in. And real estate has that nice relative outperformance, but like I said, playing up against this a little bit of a resistance, slight turn down here. We'll see if this continues, or if we can continue this upper favored and really kind of skyrocket this relative outperformance from this resistance, but it will take a little bit to break through. Going into consumer staples looks relatively strong. We've had a really nice move from avoid into neutral into favored, and has resulted in a really strong relative outperformance move versus SPY. And as flows were relatively strong this week, we look for that to continue. Again, not projecting cash flows going out, but overall seeing some real nice strength in consumer staples as we've moved from avoid into favored, and has resulted in a nice relative outperformance move. Going into technology, kind of on the flip side here, as we've seen money kind of accelerate into consumer staples, we're seeing similar money moving out of technology as we start to break down this relative outperformance. We were relatively in this box. We were negotiating this support level for the relative outperformance versus SPY. So kind of a little bit of watch this space, but with straight 11s from the strategic quarter, tactical month, and trading week, technology is our worst sector in the space. On the reverse side, healthcare, bringing you a little positive and a little bit of negative. Healthcare has accelerated out from a void, neutral, and really kind of broke through in this upper favored, which has allowed us to almost, kind of break direction of trend here. So we're on an upward trend going back from December with intermediate parts of decline, but really seeing this sustained for healthcare. We tried a couple of times before, didn't quite get there, but it looks to be on trend now. Healthcare is our top sector. It is trading tactical month of 1 and trading week of 1. Again, we're not out projecting, but when we have this upper favored, we do tend to see some really nice, strong relative outperformance versus SPY, and that's what we're looking at with healthcare. Last but not least, looking at financials. After that sustained period of relative outperformance, we're heading down into neutral. Financials at a 10 on the trading week, really being held up in a neutral by its 1 on the strategic quarter. As we start to see flows fall off, this could drop a little bit more, but we want to keep an eye on here. We got a little bit of relative outperformance support for financials, so just something to keep an eye on. Obviously, financials is currently sitting in our neutral ranking. But having a couple of weeks in a row of pretty strong outflows has resulted in a kind of a turn down in the relative outperformance, but we'll see how it negotiates this support level if we continue to drop down to a void, if some of those flows coming back from the quarter start to fall off. That is all I have for this week. I look forward to breaking the SEAF model down with you all next week, and thank you.